Hi everybody, welcome to another episode of the Fire Me channel. So today we're going to be talking about some of the effects of the coronavirus on the economy and what this means for stocks and your investments. And so first, a lot of people, including myself, have been mandated to work from home. So this means we're not going to be going out and about spending money at local restaurants, convenience stores, etc. We're just stuck home in our home office. So a lot of those people are going to be basically temporarily unemployed or probably laid off for the short term as well. So what does this really mean? Well, in the big picture, this means that we're really in a government mandated recession. Nothing that businesses or individuals have done. It's the government's telling everyone to stay home, don't spend any money. Well, they're not telling you not to spend any money, but that's essentially what the equivalent is. So we're going to be going into a government-made recession here shortly, if we're not already in it. What does that mean? It means earnings are going to be lower for most of these companies. Walmart, Costco, Amazon are doing incredibly well, but if you weren't already in those stocks, you kind of missed the boat on it. I wouldn't recommend getting into those now, because once everyone comes back to work, the demand from those three retailers is going to drop off. Like, people can only use so much toilet paper. So anyways, we are currently in a government mandated recession, or will shortly be in one. All right, so earnings are going to be less, stock prices are going to be weak, and if you don't have to buy right now, I would definitely just keep your hands in your pockets and not average down quite yet. Now, in the last couple days, there's been a bit of a rally in the stock market. This isn't because anything's gotten better. This is basically the result of a short squeeze. So what's a short squeeze? Well, when the market was falling, a lot of people sold companies short, and once you sell a company short, you have to buy those shares back. And basically, because there's so much shorting in the market, everybody's trying to cover their short positions, and the market has bumped up because of that, i.e. people bought shares, the price is going up, the demand side is outweighing the sell side. For those of you who don't know what a short is, basically you borrow shares from someone, you sell those shares that you don't technically own, hoping that it will go down in price, and then you buy them back at a lower price and repay the person that you had the borrow from. And there's usually a little interest when you do a borrow from someone, but that's kind of the gist of it. There's lots of articles online about how shorts exactly work, but that's kind of the Coles Notes version of it. All right, so we've got this stock market rally. I'm calling it a false rally or a bear market rally. Don't get sucked into this thinking things are going to be coming back right away. More than likely what's going to happen within the next week or two, we're going to see another sharp decline. I don't expect things to get better and sustainably better and holding higher prices for the foreseeable future. It's not going to be till the government lifts these quarantines and tells everyone they can go back to work and the social distancing thing's done. Probably best case scenario, in my opinion, is going to be early summer. Worst case scenario, possibly fall. So that's just my opinion. It's not based on anything, but in the event that you do want to buy a few shares, you just have to be aware of what they call a falling knife. So basically what that is a company that looks relatively cheap in historical terms to itself, keeps going down and down. A good example of this might be something like an Apple or Microsoft. Historically, the price has been quite elevated, and right now it looks cheap, but if you buy in now, you might be in for more downside. So just be aware of that. There is some companies that you can probably start nibbling at. I would say if I was to look at a few, something like maybe a Levi, Boeing possibly, maybe a Delta, a company like that has a fairly low price to earnings multiple right now compared to what it historically trades at. But pending that, you should probably just stay out of the market for, I'm going to say, at least the next 2 to 4 weeks, and just wait to see what shakes out of this. We'll probably know more of the economic impacts after the first quarter has wrapped up, and then the analysts will revisit their guidance and make their projections known. So anyways, I hope you guys are doing well. Hopefully you haven't lost too much money. I'm sure most people have, but we'll just keep plugging away. We'll be adding more shares to our $1 million portfolio over time, hopefully averaging down a bit, so when things do come back, we're in a much better position. And anyways, hope you guys have a great day. Make sure to give the video a like and subscribe if you haven't already. We're going to have a lot more videos coming out and a lot more trades hopefully in the near future. And we'll see you guys on the next video.